Welcome to my channel Solid Trade. So glad to be back and making videos again and dedicated to helping you become a successful trader. Hope you guys are doing really well. So today I'm going to talk about how to spot trading reversals, a crucial skill for any trader. And also because lately stocks have been producing a lot of reversals. Just look at the last 3 days of Tesla here. Right here, it has been selling off and then boom, going back up again, right? Selling off and then going back up again, selling off and then reversing again. So a lot of reversal setups, dip buying opportunities as setups, right? So I thought, why not make a video on how to spot these reversals? But let's be real, spotting reversals is easier said than done. You might find yourself wondering, is this a true reversal or just a temporary blip in the market? And even if you think you have spotted a reversal, you might hesitate to make a trade, worried that you'll lose money, right? Well, don't worry, I've got you covered. In this video, I'll be sharing my top tips and strategies for identifying these reversals, including market analysis techniques from my own personal 6 years of trading experience in as simple words as possible. And then we'll apply those in real world examples so you can learn to implement those yourself and start using it effectively today. So whether you are seasoned pro or just starting out, just make sure to watch this video to the end for invaluable insights into how to spot trading reversals. Let's dive in. So the first thing you want to do is take a look at the overall trend on the daily chart. Okay, daily chart is the most important chart. This helps you understand the market environment you are in and that works and what works today and may not, because what works today may not work tomorrow. So if a stock is uptrending, it's more likely to turn around after a sell-off and dip buyers get in. It's important to keep this in mind as this will give you a better chance of spotting a reversal. So in this example, let's look at here, Tesla we're looking at, right? How the dip has been reversing a lot. Right, it has been reversing a lot. Well, the reason why is because the overall trend on the daily chart. So this is the daily chart right here. This is the daily chart where each candle represents 1 day. And notice here lately, it has been very strong uptrending. Right, I'm going to clear this up. Look at it again. Very strong uptrending right here. Okay, it has been very strong. So what happens if the stocks dips? Gets back up again. It dips, it gets back up again. It dips because people are very, very optimistic lately because they have seen that it has been working really well. So they are more optimistic. That's why trend is very important. So always the thesis starts from daily chart first. Same thing if the stock was going down, but we were in this area right here, this likely would not have happened. This would have continued down. Just continued down. Okay, because the overall trend was downward. So very important to realize the trend, latest trend on the daily chart where it is. That's number one. Next is to keep an eye out for support levels because trends usually reverse at these levels, at support levels. So having support levels drawn before the market opens is crucial as it gives you an idea of where the stock may reverse. So let's look at an example here. Same thing, Tesla, we're going to look at it. Now, what I do is before market opens, you know that probably is going to come down and reverse, but on those support levels. So I draw support, key support levels, identify. So for example, right here, I've already identified these support levels right here. You see this, it's been bouncing, and then there's another resistance level right here, right? So what I do is, I find all those levels and then just draw a support line. Just like this, I draw a support line right here. So I see these are like some levels. These are some levels, 213, 196, 187. These are potential support levels. Notice here, 196, what a coincidence, is 196 right here. It lined exactly. So when the stock came down on the support level, I already had this line drawn from before, right? Notice here how it came down support level and that's when it reversed. So if you had this support line drawn already from past experiences or from your past price action, those support lines will come into play. And if you see a reversal happening on those support lines, there's a higher chance the reversal will happen. Okay, so that's number 2. Number 3, look for double bottoms or signs of weakness at those reversal levels or at those support levels. If you see a stock is coming down at your levels which you have already predetermined, if it's coming this level and it start to show sign of reversal. So what are those sign of reversals? What I'm talking about. So let's look at here. Let's further drill down in this example and let's look at this here. A sign of, I'm going to clean this up. Well, I'm not going to clean this up actually. We had this line, leave it here because this was drawn from before, right? Now notice here, the stock opens up, fails, start to jump, and then fail again. Okay, then start jump again and then fail again. But notice here what's happening now. Instead of going continue down, it's holding this support level, holding, going up, going down, holding, going up. Basically it's trying to like, it's having hard time breaking this support level. And even though it broke the support level briefly, it quickly regained it back. What it's showing is that buyers are not willing to sell. They're willing to step up and buy the stock here, and sellers are not willing to sell anymore. They don't want to sell anymore. That's what it's showing. It's showing this support level. So also, if you look at it, it's a reverse head and shoulder, which is also another reversal pattern. A reverse head and shoulder is basically a shoulder, head, and then another shoulder. Okay, and then the stock goes up. So basically, look at here, shoulder, head, shoulder. It's a very delicate thing. It takes you a very long time. Like, you keep looking at charts again and again to see these little delicacies. Okay, but you see this, it start to have showing support. Okay, that's what you are able to read it. The more you look at it, the more you will know. But signs of strength, okay, that's number 3, where on those levels, it's a very important thing. So you see signs of reversal, signs of strength at those levels, where this keeps coming up, it keeps getting up again. So that's number 3. Number 4. Now don't worry, we will put all these points into an example, and we'll look at it at the end. Okay, what all things that I've talked about, we're gonna actually put it into a real life example. Now, 4th is to keep an eye on the first 15-minute candle to make a new high. So what that means is that, let's look here. So 15-minute chart is one of the most important day trading charts. Okay, so we're gonna look at the same example right here. Well, actually, let's just make it bigger and look at 15-minute candles to make a new high. So notice here, let's just zoom it further. So we're gonna do here. Okay, so notice here we already had the support line drawn. Starts to come back up, come back down to the support level, and then the first 15-minute candle to make a new high. So this candle right here, let me just make it clean again. This green candle broke the high of the previous candle for the first time. All these candles were not breaking, previous, and finally this breaks. Okay, and then when that breaks, the stock starts to go up. So that's another one where you look for first 15-minute candle to make a new high. Here's another example. Stock goes up, comes back down. This candle right here, this candle broke the high of this candle, of the first candle, because previous one was red, and it broke the previous high, and then as soon as it broke, it continued. Okay, so 15-minute candle is also very good indicator of a reversal. Here's another example. Let's look at the next day. Right here, similar thing happened right here. 15-minute candle to make a new high. Notice here, this candle, the next candle followed by this candle broke the high of this candle, which was the high. It broke. I've made a video on this too. 15-minute candle, very important. I'll put a link down below. Very important video to watch if you want to learn 15-minute candle make a new high. Very effective. Okay, so look for a 15-minute candle to make a new high at the same time on those support levels. Okay, now number 5 is look for trend breaks at the same time where it's making a 15-minute new high, bouncing a support, showing strength. And if it also makes a trend break, that's a very good setup. So what do I mean by that? So trend breaks are when the stock on a smaller time frame starts to make a trend. So notice here, what happened is start to make this trend right here. Okay, so you see here how I had this trend, and then here it broke the trend. At the same time, funny enough, it also made a 15-minute candle to make a new high right here. So if I draw a line on the 15-minute candle to make a new high, okay, look how it coincides in the exact same area on the trend break right here. This is the exact same area, 197 right here, broke exactly same. They all coincide the exact same time. Okay, and then look, as soon as it did that, it just reversed. Okay, very important. Trend breaks happening at the same time while you see signs of reversal. Okay, so trend breaks, that's number 5. Number 6 is very important, which is make sure the stock is in play or has a news catalyst It means the stock is in play, which means a lot of other people are also watching it. The only reason the stock bounces up is because people are there to buy it. If nobody is watching it, no matter how great the stock is, no matter how amazing the stock is, if nobody is willing to buy, it's not gonna go up, right? So the stock has to be in play. That is why I like to trade big cap stocks like Facebook, Apple, Meta. The reason why, because a lot of people are watching it. It's never ever gonna die down, right? Or if the stock has earnings or has good news or bad news, depending, you can look for a reverse on the other side as well. But the main idea is there has to be a reason where a lot of people are watching it. Okay, and it's not. That is why penny stocks don't work. A lot of people try to buy the dip on penny stock and gets burned. Let's look at an example. Actually, here it happened in penny stock right here in LUNR. Actually, this went up about 300% in just one day, right? Everybody was like, oh my god, it's great. And once it starts to come back down, so it was at just 2 days ago, this was at $140, okay? And when it came down to 100, people were like, oh my god, it was at 140, now it's 100, let me buy the dip, right? It will reverse and it will go up again. Look what happened. 100, now it's back down to 22, guys. In just 2 days, it went down from 150 to 22. And people are still hoping it's going to go up, and it's not. It's going to keep continue go down. Because now everybody's stuck, okay? So penny stocks are pumps and dumps. Penny stock, the reversal on penny stock is not the same as a reversal on big cap stocks or the stocks that have catalyst where people are watching. It's not the same. So this strategy does not work on penny stocks mostly. It does work if it's in play or has a really good news, but still be very, very careful. So now that we have learned all these things, now there are lots of other new ounces here. There are lots of other points, but I want to make this video as short, and I don't want to give you a lot of, information, but these are the main ones. I'll make more video on this in the second part. If you make sure you subscribe, I'll put more videos on this similar to this if you guys learned something from this. Now, all the things that we learned, let's put this into a test, okay? So we notice here, we're just going to take this as an example again. So notice here, first, what we do is we draw support levels. So I draw support levels before the market opened using from past experiences or past price action. So these are the support levels that I've drawn right here. I see there's some more support levels. These are the support levels I've drawn, okay? That's what it looks here on the daily chart. I already know that most likely Tesla has on an uptrend, so most likely it comes down and will dip and then will reverse. That's number one. That's number two. So I already know the trend. I already have drawn my support levels, okay? Second thing is, then you go to the lower time frame and then see what happens. So the market opens, starts to go down, it starts to sell off, okay? Starts to sell off. In the process, starts to make this trend right here. So you're watching this trend and you see that starts to holding your support levels already drawn before. So we got that in check. Now there's a trend break. As soon as there's a trend break, there's a great opportunity to buy right here. Your stop loss will be below this level. So what means that you buy around this area, your stop loss around this area, just give it a little bit of room, okay? If this fails, so this is your stop and this is your reward. So you see you get a bigger reward, and then if you do take a loss, it's possible you can take a loss. If you do, you always make sure you cut your losses short and then let the winning trade run. And that's how you make money in trading, right? So there you have it, folks. My top tips for spotting trading reversals. Now get out there and start making some solid trades. Take care. Bye.